It will be inspiring, he says, but I don't think the markets might agree with what Mr. Trump is suggesting. Let's decode how the markets are looking at Liberation Day and what it could really bring. Two distinguished market experts joining us. The head of equity at MarketSplit India, Mayuresh Joshi, with us, along with independent markets commentator Geoff. Gentlemen, thanks for making the time. Mayuresh, you tell us first, what's the overriding thought in the Indian markets right now about Liberation Day and what could really be brought in? The worst fears that market men are contending with right now.
Evening, Vikram. Pleasure to be on your show. No, two things. I think there is a huge uncertainty of what will come through tomorrow evening as we speak. And therefore, the rhetoric in terms of the Trump tariff plan, how that gets implemented, which sectors are probably going to get affected, and how our country is going to probably get taxed. I think that is going to be the foremost important facet that the markets will probably look at. And obviously, markets are way too jittery getting into this event. The only question on the market's mind, Vikram, is if this rhetoric continues with the absolute stand that President Trump has taken, and if there is a reciprocal tax that happens across nations as we speak, what happens to global growth? What happens to US growth? What about the recessionary fears that are now cropping up if this continues to linger for a longer periodicity of time? And from a micro perspective, what kind of an effect does that have on corporate earnings? And de-rating in terms of forward multiples across global equity markets is something that the markets are comprehending well. So yeah, I think what really transpires tomorrow is on everybody's mind as we speak. But if this lingers with the absolute stance that President Trump has reiterated, and that continues in a rhetoric fashion for the next few weeks without any negotiations on the table across a lot of different economies, I think you're going to see a lot more volatility happening in the equity markets. So I think, yeah, markets are bracing for what probably gets announced.
What's the global outlook for Liberation Day? Is it much more of the rhetoric, the uncertainty, what it could really bring to the table? Or is it about the announcements that would be made?
I think the announcement's important, obviously. I think the whole thing's frankly absurd. It's not US Liberation Day. I think it's going to be a big problem for the US economy, what he is doing, Trump's doing, and I think it's just going to get worse and worse the more tariffs they put on. But I think the way to look at it is to understand that the US economy is now very weak, and it's probably going to weaken further. There are concerns, of course, about inflation at the margin, stable around the 3% level. The tariff increases will make that inflation story worse in the short term. And although I think President Trump has this wonderful idea that everyone is going to bring all factories back to the US, is going to be beneficial to the US versus other countries, I think in truth what it's going to do, it's going to lower all boats in the water, including the US. It's going to be a major problem for global growth. And so I think until we get some sense of stability in US tariff policy and trade policy, as the previous speaker said, I think it's going to be a challenge for markets, including emerging markets.
How much of a challenge, Mayuresh, is the real question? You did say that several sectors would be hit, but some more than others. So when you break that down, sectorally speaking, with the kind of rhetoric that we've heard already, whether you consider the impact on the auto sector or the pharma sector, how do you think these sectors are going to react as far as the announcements that are likely to come through, or even the uncertainty that the rhetoric, the continuing rhetoric would impact?
He's already done that, right? And specifically for autos, there's a 25% tariff that's already been imposed. What you're seeing in terms of expectations of a lot of sectors, in fact, whether it's pharma, whether it's gems and jewelry, whether it's textiles. I think a large part of our export component too probably comes from these sectors itself, outside services. And therefore, I think specifically as far as autos are concerned, India might not get impacted that much. As far as our Korean and our Japanese counterparts might. And therefore, I think the cost of producing the same cars, as an example, in the US, I think the US hardly makes a 100% car made in the US itself. I think the cost will go higher. Similarly, in case of pharmaceuticals, I think we've been hearing of an inappropriate or an disproportionate tax that might come through. Outside US, I think India has the largest amount of FDA-approved facilities. And the cost of making generics and the cost of developing a new drug, it is a time and a cost effort. And therefore, I think all these elements, if they're put together, ultimately the end user cost is going to go significantly higher. And that's going to pinch the US consumer quite hard and quite significantly as well. So in my own opinion, again, I think autos, the rhetoric might still continue because he still wants to make the US manufacturing theme continue, specifically for autos stroke industrials as a policy. But for pharmaceuticals, I don't think that the rhetoric will probably play out. Similarly, I think in terms of textiles, a large pool of the textile market is largely dominated outside India by China, Bangladesh, and Pakistan. And therefore, I think the expectations in terms of a significant amount of tax coming through might also mean that the end user might actually have to pay a lot more when it comes to pillows, blankets, bed sheets, as an example. And therefore, how sustainable is that going to be is a big question mark. But yes, I think my own sense is that autos might still linger. And if you've got the entire issue at play in terms of discretionary spending coming down, recessionary fears being raised, IT's forecasts might actually start coming down, which has already got reflected in the index as we speak. My own sense is that it's going to be very sector specific. Trump will bring a lot of countries on the negotiating table over the next few weeks, negotiate hard. And therefore, I think a few sectors like pharmaceuticals, in my opinion, might actually not get the brunt as the markets are feeling. And therefore, pharma as a space which has got beaten down as far as US exports are concerned, might actually have the respite that is needed in terms of Indian exports and should show a smart bounce back as well.
Geoff, just taking away from what you're hearing from Mayuresh as well, because as far as this entire drive of the Trump administration is concerned, it seems like they want to strike these hard bargains, negotiations, and some of that rhetoric is geared towards that. Once that entire process starts, do you think the markets are likely to see that, or is that already factored in, and despite that, fears persist?
I think there is a certain element of, sell the rumor, buy the news here.
Right.
But it certainly depends on, as we've already just discussed, it depends on what happens tomorrow and in the weeks to come. As Mayuresh has said, it's still very uncertain and markets just don't like uncertainty. But clearly, Trump is a deal maker. He wants to make deals with individual countries and perhaps individual companies within major sectors. But what worries me a little bit is as an emerging market guy, and very much more as a macro guy, put it that way, is if you look at the 10 biggest bilateral trade surpluses around the world with the United States, 5 of them are pretty important emerging markets, and 4 of them, China, India, Taiwan, and Korea, are all in that top 10. And these 4 make up just about 3/4 of the emerging market index. Then you add Mexico, which is much smaller. So depending on how he targets these countries, and of course there's been some talk from Scott Bessent, the Treasury Secretary, about the Dirty 15, which doesn't just include trade flows, but also includes the tariffs that these individual countries put on. And I know India's got a lot of tariffs, but yes. So we don't really know who this Dirty 15 are, but we can see who the top 10 bilateral surpluses with the US are. And these are countries that I think are going to be, if not under pressure, they're certainly be watched very carefully because to see what Trump actually does. But if I can reiterate the point, I mean, EM's doing well this year relative to developed markets. I think we're going to get targeted to a great extent in some of these big markets by what Trump says. But frankly, we just don't know. And the uncertainty is what's killing everybody.
Yes.
And I think what could be beneficial after tomorrow is maybe a sense of we got some visibility about where it does go.
Right.
So sell the rumor, buy the news is possible.
Mayuresh, even though we are talking about the uncertainty, it isn't like the entire tariff card hasn't been played up in the past by Trump himself. In 2018, we saw that. What's different this time around, and how markets are reacting to the expectations and the uncertainties around it?
I think so. That's one aspect, right, which might actually pull down global growth. And at the same time, we are countering consumption slowdown as we speak in the Indian context as well. So I think from a micro perspective, the dire need is to probably pull consumption up. which has probably been addressed in a budget in a way. With the tax cuts that are expected to come through, 1 lakh crore is something to be coming in as we speak in this quarter and the first half itself. And therefore, I think as a large part of this pool, which is expected to get saved, comes into this system, either as savings or through discretionary spending, a large part of the consumption pattern should start pulling up. Again, rural consumption is coming back slowly and steadily as we speak. There are La Nina conditions brewing as we speak, and therefore the expectations of bountiful monsoons this time around will mean that rural consumption might come back very, very strongly. And therefore, I think consumption as one of the pockets of GDP should start reflecting better growth dynamics as we speak into the first half and even better numbers in the second half. Investments have started coming through specifically from the government side, and therefore government capex, which had lagged for a large part of the last financial year because of monsoons, elections, so on and so forth, have started coming back very, very strongly. And private capex should again come back as we head into the second half of the next financial year. Right? And last but not the least, I think corporate earnings should probably bottom out in the next couple of quarters. Q4 might still be a tad bit weaker. But compared to the rest of the globe as we speak, domestic cyclicals are exhibiting stronger growth dynamics. And therefore, select pockets within the markets which are more domestic oriented and domestic focused with all these factors at play might actually do well and hold the markets while the others might just falter a tad bit because of global pressures.
But what can investors do right now? That's a big question. And safe haven kind of buying is something we are seeing. Assets like gold are on fire and they've hit fresh record highs, Geoff. Crude oil also climbing. It could be a knee-jerk reaction. But do you think we're looking at a prolonged flight to safety, Geoff?
It's a rather complicated flight to safety, frankly, because the typical one of the typical responses when there's a flight to safety around the world is to buy the US and then to buy the US dollar. That's not worked very well this year. I thought the dollar would be stronger this year than it's turned out to be. But yes, gold is very, very strong. I think the oil story is not really a safe haven story. I think it's complicated by the potential for secondary sanctions on Russian oil, which is again something that Trump has threatened. Now, whether he comes through with that, I would very much doubt it. But the oil market dynamics are, of course, different. And the other way in which you see safe haven buying, and notwithstanding the weaker dollar, is in the US Treasury market, which of course has rallied dramatically. But I put that down, frankly, to this real collapse in some of the US economic data, particularly the sort of sentiment data, consumer confidence, business confidence, etc. I think we're on the cusp potentially of a US recession here.
Yes.
Because of all the uncertainty. And therefore, safe haven plays are not easy to find in this environment. Let me just say one other thing.
Yes.
What's interesting to me, particularly recently, in the last 2 or 3 weeks when India's done better before today, is there's a bit of an India versus China thing going on again.
Oh, yes.
You know, and India, for me, if I can put it into a global GEMS context, is a sort of more defensive play within emerging markets. And
right.
if China continues to fall, which I think it will. It rose today, but I think it will be weak. That is something which is going to pull money back into India. So all the relatively constructive talk by Mayuresh on India itself internally, I think is something foreign investors will pay attention to.
So safe haven buying and India could be a buy for FIIs. Are you as convinced about this, Mayuresh? We're looking at, like Geoff said, the dollar is performing around 104. The 10-year Treasury yield benchmark floating around 4.2%. And they've fallen for 2 sessions straight. Investors, of course, are cautious about the dollar and yields. They're waiting for clarity, the economic outlook, recession fears in the US. But you tell us, by way of what we can expect from the Fed and how that's likely to play up in the Indian markets.
I think a large part of the pool of expectations from the Fed is they're reiterating their stance that there might be 2 rate cuts before we end this calendar year. It's all based on data points on how inflation numbers play out, whether you are actually seeing a recession play out in the US, do these tariffs carry on for a prolonged periodicity of time. And therefore, I think the base case scenario that the street is working out with these 2 rate cuts, our probable sense is that there might be just one as we end this calendar year. And therefore, I think the rate cut cycle, which will follow globally as the Fed does cut rates, will follow suit as well. But in the Indian context, Vikram, I think if we do get a better monsoon, as one really expects, food inflation will largely be under control. If growth does taper off, the external factors, including how crude will behave, and if crude stays at lower levels, acts as a beneficial factor in terms of our trade and current account deficit. The hope is that domestic growth continues as I speak. And
Yes.
therefore, I think the internal dynamics, as far as tax collections are concerned, might still be relatively stronger compared to how the rest of the globe is probably positioned vis-a-vis inflation and growth. And therefore, even in the Indian context, there might be a rate cut or two as far as the RBI is concerned as we end this calendar year as well. So putting all this in context, our own sense is that financials might also continue doing well,
Right.
both from a valuation and a earnings perspective.
Geoff, very quickly, if I can ask you, what's more dangerous for global equities right now, especially for emerging markets? Is it the kind of tariffs we can expect from Trump, or is it about the uncertainty about the Fed's rate cuts? If it gets pushed back, is that a bigger fear?
I think it's the former, not the latter, very quickly. I think there's so much risk that Trump puts a lot of tariffs on and continues this extraordinary will he, won't he, which sectors are going to be hit, which countries are going to be hit. That is a much, much bigger threat, I think, for global economies and global markets than
Right.
worrying about whether the Fed cuts once or twice. I think they cut twice, but I don't know. Mayuresh may be right. They only cut once. But right now, the US falling into recession is another big risk. But this is all down to tariff policy right now, what he
Yes.
does and what he doesn't do, and how much certainty can be generated out of that.
Well, the uncertainty is something that the markets don't like. We keep saying that, and it is very, very true as of now, as we wait for what Liberation Day brings to global equities, emerging markets, Indian equities included. Mayuresh and Geoff, thank you very much. This is a pleasure having you just ahead of what the markets need to be bracing for, what investors need to be bracing for, and we're watching what's happening on Wall Street right now as well. In fact, markets have opened lower, majorly because of fear surrounding tariff